Hey everyone, Amazon is scheduled to report second quarter 2024 earnings results after the markets close on August 1st. Now, there's a lot of big items to look out for from Amazon when it reports this quarterly update that investors will not want to miss. I'm going to highlight those big items to look out for, and they might not be those top line things like revenue and earnings per share. Those will be important to be sure, but there's other items that are less publicized but have vital importance to Amazon stock investors, and I will be sure to point those out in this video. I'll also answer if investors should buy Amazon stock before earnings or after earnings. I'll let you know what I think about that decision in this video as well. So let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so Amazon's net sales increased by 13% in its latest quarter, but more importantly than the top line big highlighted number of net sales is AWS segment sales. You see, Amazon reports revenue in three segments: the North America segment, the International segment, and the AWS segment. The AWS segment is the most important for Amazon because it's the most profitable segment of the business. That's where the artificial intelligence side of the business is housed as well. Now, in its latest quarter, the AWS segment increased by 17% year over year to $25 billion, and that was faster growth than the rest of the company, which only grew by 13%. This will be the key number to look out for from Amazon when you're thinking about revenue. When you're thinking about revenue growth, you want to look at AWS segment sales. Did this segment grow by 17% or more? If it did, that's going to be really good news for Amazon stock investors. All right, operating income, two big things to look out for from this segment. The North America segment became extremely profitable in the most recent quarter. It generated $5 billion in operating income. That's compared with just $900 million in the first quarter of 2023. So a more than 5x increase in profitability from the North America segment. The reason for this is management made some improvements in the logistics and fulfillment network. Instead of having central locations, the company decided to get closer to customers, and that proximity to customers had huge benefits. It not only increased delivery speeds because now Amazon is closer to customers, but it also lowered the cost to serve because Amazon is closer to customers. Packages had to travel smaller distances to get to customers, and that's lower cost for Amazon. And so that's driving big profitability improvements. And management noted that there's room for continued improvement in that strategy to continue to get closer to customers, continue to improve inventory management, and that's going to drive profitability in this segment. So I'm looking out for continued improvement in that segment. Also, I highlighted that the AWS segment is the most profitable in the company. And you'll notice here, the AWS segment generated $9.4 billion in operating income in the latest quarter. And that was almost twice as much as the North America segment, which generated $5 billion in operating income. But if you look at revenue, the North America segment generated $86 billion in revenue, while the AWS segment only generated $25 billion in revenue. So less than 1/3 the revenue generated in the AWS segment, but still almost twice the profitability generated from that segment. So you can start to understand why that segment is more important to Amazon stock investors. Dollar for dollar, it adds more profitability to the company's bottom line than any of its other segments. I'm also looking out for operating cash flow, which is doing really well at Amazon, increasing 82% to $99 billion for the trailing 12 months. Free cash flow, $50 billion for the trailing 12 months. And what that tells you, the difference between operating cash flow and free cash flow is primarily capital expenditures. And these are investments in things like warehouses, data centers, planes, manufacturing facilities, which Amazon doesn't have very many of, but it does have a big logistics and fulfillment segment that it needs continuous improvements and investment to increase the technology, update the technology, increase the square footage, change the locations, getting closer to customers, all of which cost the company a great deal of money. In fact, the company spent roughly $50 billion in capital expenditures in the trailing 12-month period. Now, that's been decreasing, and that's one reason the company's free cash flow has been improving so rapidly is the operating cash flow is increasing while the capital expenditure is decreasing, and that difference is creating leverage and increasing cash flow for Amazon stock investors. The CEO said that the combination of companies renewing their infrastructure modernization and the appeal of AWS's AI capabilities is reaccelerating AWS's growth rate, which is now at $100 billion annual revenue run rate. Another area of importance is advertising, which continues to benefit from the growth of the stores and Prime Video businesses. Advertising is a sub-segment within the business, and that is lucrative as well. Higher profit margins than most other segments for Amazon. So the continued growth of advertising revenue will lift Amazon's profitability higher as well. So for net sales in the second quarter, Amazon has forecasted something in the range of $144 billion or $149 billion. In other words, they expect to grow revenue at 9% at the midpoint, with operating income expected to come in at $12 billion at the midpoint, which would be up by roughly 1/3 from the $7.7 billion it generated in the second quarter of 2023. So let's talk a little more about cash flow. And I highlighted the operating cash flow and how nicely it's been growing. And that growth rate has been accelerating. You can see here over the last 6 quarters of data that Amazon presents, you can see that growth rate increasing from 1% to 38 to 74 to 81 to 82. So nice trend lines there for operating cash flow. And similarly, you notice the purchases of property and equipment, which is in other words a proxy for capital expenditures, decreased by 15% in the trailing 12 months. They spent $48.998 billion or $49 billion in the trailing 12 months that ended Q1 2024, and that's down from $57.6 billion in Q1 2023. So their CapEx has been falling, as you'll notice here, from 58 to 57 to 53 to 50 down to 48. But you'll notice a tick upward here from 48.1 to 48.998 billion. That suggests that maybe the company is now increasing capital investments again. And that's something I'm going to watch closely in this update. Did this number tick higher again, slightly, or was there a big jump higher? I want to see that because I've liked Amazon stock in 2024. I've had it rated as one of my top stocks to buy. One of the reasons was the company was able to optimize all of the investments it made in 2020 and 2021 and 2022 when people were spending a lot more money on Amazon.com and the company needed to invest in their infrastructure. They overinvested in that infrastructure, and ever since then, they've been growing into that. And if I see this number moving higher significantly, it tells me that those days of growing into those investments might be over. And it might be that Amazon has hit their capacity limits and they need to significantly increase the purchases of property and equipment again to meet this growing customer demand. So no longer can they grow into those investments. I don't know if that's the case just yet, but this slight tick higher suggests it might be. And so I'm going to be watching this closely to see if this jumped significantly when they report. And finally, one other big item that is not going to be well publicized that I'm watching closely is employee count. Now you'll notice for several quarters in a row, they were decreasing their employee count. Again, going along with that story where they overinvested in their capacity to make sure they could fulfill customer demand. But since they had too many people, they've just kind of been whittling down that total employee count or the growth of employees. And several consecutive quarters, you see -4%, -10, -4, -3, -1. But in the most recent quarter, you see that growth, 4%. So they actually increased year over year. Now I want to see if this is a continuing trend of increasing employee count, which coupled with the purchases of property and equipment will tell me a full picture, will give me a better picture of whether or not Amazon needs to spend more in order to grow, if they've reached the limit of growing into their investments. So I'm watching this as well. And this is something that I'm going to be watching in conjunction with the purchases of property and equipment to give me an idea of what's happening with that trend line. Okay, is Amazon stock a buy before earnings or after earnings? I can tell you that Amazon stock I have rated as a buy. It's one of my top stocks to buy. It's trading at a forward price to earnings of 31.91. I like the risk versus reward at current valuations. Whether or not you should buy before earnings or after earnings, with Amazon, I'm indifferent. I don't see any reason why buying before earnings would be a really bad idea. And I don't see any reasons why buying after earnings would be a really bad idea. If you're looking to lower risk, then buying after earnings, I feel, is the lower risk decision. But if you're not risk averse and you don't mind taking extra risk, then you can buy before earnings as well. Overall, I like the stock. I like the value at current prices. So you can buy before, you can buy after. I'm indifferent between those two. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.